All right. Good afternoon, good evening, or good morning, wherever you are, in whichever part of the world. Welcome to the Global Market Review. It is Saturday, the 23rd of May, 2026. It's about 3:21 p.m. starting now, but I hope to finish this before 4 p.m. India time and then upload it. Just posting this because nowadays anything can happen anytime, quite literally. So just putting the timestamp out there so that we know till when we had covered our analysis. You also see the disclaimer on the screen. This is not financial advice and it's only for information and educational purposes only. Please consult whoever you need to before you make any investment decisions. All returns and risks are yours. Also looking for feedback, collaborations, ideas, suggestions on what we can do together or better. And you have the contact information on the screen. I'm Dr. Musa, uh, not only a medical doctor, but I've been in the markets for more than 20 years and I have the CMT designation. You have my phone number, WhatsApp number, and also my email. Look forward to hearing from you. All right, so with that, let's get in and jump into this week's global market review. Just a heads up that the last global markets review was, I think, done 3 weeks back. So we've got quite a bit of a break since then. Well, if you did watch the previous global market review, if you did not have a look at it, much of the theme that we covered then actually continues. And one of the key themes, at least for the Indian audience, was that the global markets are doing way better than the Indian markets. So that's going to be one of the highlights of today's session. The other thing that I'm going to also introduce, and I added some more indices to our list to analyze, is something we had covered in the previous global market review, that when you are investing globally, it is very important to consider your currency exchange rates in your total returns. And we will discuss that as we go along. All right, so let's jump in. And well, if we just look at starting with the Dow Jones, the US markets, the Dow Jones has after having a bad April and falling 10%, has recovered that entire 10% and actually gone higher and made a new life high on Friday as we closed. Bit of a um, pause, you could say, in the Dow Jones, in the sense that that momentum seems to be wavering a bit. There's definitely this bearish divergence that you're going to see in the daily charts, right? So that is something that you could just keep in mind. Not saying the uptrend is over, but definitely saying that the uptrend could pause for some time, maybe a small correction, at least as far as the Dow Jones is concerned, and then it goes back up again. So that's a bit of a just a heads up, like a sort of, you could say, warning. Um, Otherwise, that's only in the short, daily time frame. Otherwise, it is all fine. Looking at the SPX, the SPY, sorry, the 500 stocks, that is definitely something that has outperformed the Dow Jones. As you can see, this was the April fall for the SPY. It has not only recovered from that previous high that it had with that rounding top formation, but has gone up quite meaningfully from there. So in the last 1 month, 3 weeks, more than a month actually. So we've got a decent what about 8% up move on the SPX. So that's quite substantial for a large index like that, for an 8% move. So the stocks in the Dow Jones not so representative of the overall market, as we already know. The Nasdaq, the technology heavy index, that's done even better, right? From the correction it had in the April, like every other index, this has also done much better than the Dow Jones and has gone up, let's say, you know, They're again about 13%. So the technology stocks doing way better, definitely outperforming, probably hands down, many of the other sectors. We're not doing sector analysis of the US here, but definitely these are the major indices that the rest of the world tracks. And as you can see, the tech stocks are definitely doing exceptionally well, right? This is the Russell Small Cap 2000 Index, right? Small companies, mid cap companies, it's a bit of a mix, and that also has done well. So the US market's definitely showing strength. The Iran US conflict sort of, won't say in the back burner, but on a pause. Not sure what's going to happen. That ceasefire is just indefinitely being extended. Of course, one can't take things for granted, but at least as far as the markets are concerned, they seem to have factored in whatever the issue is. And unless something really adverse happens at any time, looks like the US markets are definitely in a very healthy space, and definitely lots of opportunities are to be found there. There's still upside left, in my opinion, with the U.S. market. So if one is, looking for opportunities, that would definitely be the place to go and have a look. So US, well, if you want to consider that it has set the mood for the rest of the world, well, definitely Canada is following up with it. This is the Toronto Stock Exchange at its life high, like a double top, almost a triple top, right? Seems like a bit of a pause on the monthly side. This has definitely, the RSI has gone to a very high point of 85. You can see that this RSI was, this high previously in 2001, right? We never seen those levels that high since then. So this is something just to keep a note of, and this time it has crossed even those historically high levels. I suspect, and obviously we'll know this in time only, that the Toronto Stock Exchange is likely, if even if it does, go higher, is probably likely to put in some sort of uh, bearish divergence on the weekly, monthly charts in the coming few weeks and months. I mean, just a heads up, given what we are seeing right now. So if you are in the Canadian Stock Exchange, profit booking could be a good thing to do on the market-wide basis, but upside is still there, and look for any weakness. As far as weakness is concerned, you could look at the daily charts and see that we have, a double triple top and a doji that is forming on Friday. So some hesitation in the market participants in Canada on the overall market basis, on the TSX at least. Coming to Europe and going straight away to Europe's largest economy, the DAX, the German exchange, right? It's done very well, especially after, I would say, the Ukraine crisis broke out. The German stock exchange has done well. European markets have done well, and this, one of the reasons is because a lot of money has come in, was expected, and did come in into the defense production, the military industrial complex. And then Trump's NATO tantrums have also made a lot of Europe want to be more self-reliant and not dependent on rest of the world, neither US nor China. So there is money being pumped in, and Germany also released what is called as debt brake, and decided to loosen its fiscal approach. Those are some of the macro reasons that the market has gone up. Now, if you just look at this the from a macro perspective, and you look at it from 2023 onwards, the European exchange the German exchange market has gone up by 55%. You could say that in about 3 years. That's very impressive. I mean, 55% on the index in 3 years is exceptional. Absolutely. Could it cool off now? maybe there is a clearly a sidewards movement that you can see here on the weekly chart, bottom left, and you can see from April 25 to, well, literally now April 26, the market has gone sideways. So the last 1 year has been really sideways market in Germany. Just consolidation, digestion of the gains, time correction that is going on, right? Coming to the CAC, that's the French exchange. More or less, you can see that it's the same thing. Not as good as Germany, right? It has gone up from 2023, but the way the German exchange has gone up is not the same way as the French exchange. This is the monthly index, and you can see that basically from March 24 to now, more or less a sideways move, right? After going up prior to that. UK has done definitely better. Coming back to the monthly charts for UK, you can see that from 2025 to now, uh, you know, that's a good 24% up. And then last 4 months has been, again, consolidation. So UK monthly RSI again, at 83, 85. Is that wondering if it's at a life high? Yep, yep, yep. Right. So we've not seen such levels on the monthly RSI ever before. So this is definitely grounds for, I was going to say concern, not concern, but it's something technically to be really be very sharply aware of. That at least on the technical side, the upside could be limited. And of course, with crude oil prices going up and staying up, and no real long-term resolution in sight, it looks like it could be that there will be, not could be, there are significant pressures on the economy worldwide, and that is something to keep in mind on how the economies would function fundamentally moving forward. This is the Japanese index, and that is definitely doing well. And this is something worth repeating, that the Japanese index, after having recovered its lifetime high, which was in 1989, and then it recovered that a good 21 years, okay, to come back. So for 21 years, it was below that peak, right? You can imagine what they call it, the lost generation, the lost decades, etc. And then after that, the when the breakout happened, and we did mention this several times in our WhatsApp groups and messages about how Tokyo, Japan, the market would definitely do well, and it did do well. It's gone up by 58% since then, right? So exceptional moves, and I don't think the Japanese market moves are over, right? It's likely that the Japanese Nikkei is likely to head higher. 65,000, 70,000 could definitely be on the cards. Okay. Coming to the Australian market, down south, Australia 200 cash ASX 200 index made a life high in March 26 and then has corrected from there, right? Uh, you can see again on the weekly chart here. Let me make that the major chart. Sort of a triple top, you could say, or a consolidation, even a quadruple top from August 25 to October 25 to February 26, and then now to April 26. Again, going sideways and quite a bit of volatility there. So a sideways, you could say directionless market as far as Australia is concerned. Now getting into Asia proper, we start with China, the big brother, and this is the Shenzhen Stock Exchange, right? Again, something that I've been mentioning again and again on my global market reviews about how the Shenzhen Exchange could be a multi-decade opportunity from 2026 to I don't know, how long. Uh, it's amazing that the exchange is still 2007, almost 20 years away Still 20 years after its life high, it is still 40% upside left to go back to its life high. When could it do that? A lot of issues in China: domestic consumption, real estate slump. But it's still the largest economy after US, and China is doing a lot of things to try and keep the uh, economy going, apart from exports, which they have figured a way around Trump's tariffs. There's still the issue of domestic consumption, but still, just on a pure technical basis, China is a buy. Right, every correction could be used from a long, multi-month, multi-year perspective. Person's investment, not for trading. You could look at the Chinese exchange. Okay, China, opportunities in China, robotics, AI, and many other things in China really doing well. The Hong Kong Stock Exchange, mixed bag, right? Life high in 2018, and then after that, it's just been in the doldrums. Actually, been in the doldrums from 2007. So just like the Shenzhen Stock Exchange and the rest of China, this fall mostly because of the Hong Kong clampdown, the democratic clampdown, and various issues. And then after that, well, people forget, life goes on. Well, okay, people don't forget, life goes on. And the market has moved on, but still going sideways. But why Hong Kong is still important is because if you look at it from, let me put something that I've mentioned both for China and Hong Kong. This is the entire, from 25 or even 26 onwards, didn't really get affected so much by all the Iran US conflict. China, Hong Kong seemed to be quite uh, um, immune. Maybe it's too strong a word, but definitely they rode out this more in a stronger fashion, in a more resilient fashion. I think that just is indicating that there is some inherent strength which is there both in the Chinese and the Hong Kong stock exchanges. They haven't risen to the life high, that's for sure, and that's for structural reasons within those domestic economies and the exchanges. But I feel technically, especially on the Shenzhen side, that things are getting better, and upsides are definitely possible. Right, Hong Kong still to show some recovery there. Coming to the Singapore exchange, that's also done well, as you can see on coming to the weekly chart. Right, went up again 25 onwards and done a 1.5 years sideways move, right? Corrected in 26 again because of the the Iranian US conflict, and has recovered, not to its life high, but it's hanging on, right? And the Singaporean Prime Minister, if you Google, gave a very frank and straight-faced, straight talk about the challenges that Singapore is going to face. That even if the war gets over, things are not going to recover quickly as far as the economy is concerned. The hangover of global crude oil, trade disruptions, fertilizer disruptions, energy disruptions are going to take months, if not more, to recover. So the pain is there on a much longer basis than most people want to understand. Do Google it up, and it's worth watching. I think it's there on the um, Channel News Asia, CNA. If you go there, you'll find it, or I'm sure you'll get it, right? Worth watching. So Singapore doing well, right? Almost near its life high. Coming to Korea, this is one fantastic mover, and this is because of the AI boom that all the Korean companies, Samsungs and Hynix and all the semiconductors, chip manufacturers, anything to do with hard drives and GPUs, CPUs, and South Korea is the leader in that. So, almost a doubling. If you see from January 26, sorry, December, yeah, January 26 to now, it's gone from 4,200 to 8,000, right? That's phenomenal. And right now, just seems to be, in a tearing hurry to go up, and the demand for AI hardware just does not seem to be cooling off at all. So um, a time to be very cautious. There could be, severe corrections, but at the same time, upsides are also quite likely. Will we see 9,000 or 10,000 the Kospi in, I don't know, this year itself? The rate at which it is going, you really, really can't rule it out. But at the same time, significant corrections could, volatility could happen. So if you have the stomach for that, then yes. But the time, I mean, here's a lesson. If there was a lesson, then this is it. That there was this huge sideways move from 21 to 25, so almost 4 years, and then it just took off. And technically, if you were even, it broke its that time's life high in October 25. And if one had tracked that and seen that, of course, nobody would have predicted a doubling of the index, but that was the technical breakout to actually watch for, and then if depending on one's risk appetite, enter and just ride the wave. Right, would have been a very profitable movement. So that's a technical insight for everybody. This is the Taiwan Stock Exchange, and basically same thing, following South Korea, Taiwan again for its semiconductor prowess and all the almost the sort of TSMC and all those companies that are the bedrock for semiconductors and chip manufacturing. So yeah, and again, uh, the AI thing is just probably getting stronger and stronger. So if one is looking for opportunities, then South Korea, China, Hong Kong, Taiwan, these are the places to look at. Late in the day, but definitely possible, right? All right. Now, sort of switching tracks and really coming to something that was highlighted in the previous GMR, and want to re emphasize this for those of us who are global investors. This is the Indonesian. So far, I have looked at the indices in their native currencies, what all the charts that you see, and I haven't really bothered to add the US dollar index for each one of them, because structurally they're all really good. Though at some other GMR down the line, I will add that too. Now, coming to places where significant currency devaluations have happened in the last, no, not just few years, but also over the many decades. Now, you're going to see two charts that I'm going to put out. One is the local currency index, okay, the index in that local currency, and that same index in the US dollar, right? And what we want to notice is how, in some cases, they look dramatically different. And that if you were invested in the local currency, it would look like you made a lot of money, which you would, of course. Your purchasing power in the local currency would go up. So there's no doubt about that. But if you were investing in that market as a foreigner, as a foreign portfolio investor, as we call them in India, or a foreign investor through mutual funds or an ETF in that country, but you were, let us say, in dollars, and I'm going to use a dollar index for that same country, then your returns are going to be very different. So it's just no particular reason. Just starting off with Indonesia, you can see that Indonesia has had a severe correction that is going on. Good to just look at it. So in the sense that lessons to be learned, you had a move which was almost 45% up, right? Up from its previous breakout, and that 45% happened from, say, June 25 to Jan 26. So in about 6 months, right, you had a 45% return on the index in the local currency, and the entire move has been lost now, right? So I'm not sure why. As we've said before, charts don't tell you why, they only tell you what, right? So the important lesson here is that all your gains lost. The investors in Indonesia must be feeling extremely pissed off about this, the local investors, and yeah, I'm sure there's a economic reason going on. Is the Indonesian economy getting weaker? Perhaps the oil shock has really, pivoted things, and negative growth is happening. I don't know, but Yeah, if you don't book your profits and if you don't have trailing stop losses and all. And here's another thing, long-term investing, when people talk about long-term investing, when you make 45% then lose it all and then it's gone for a year and you're back to square one. I mean, what's the sense of long-term investing? Right? I've been a quite a staunch advocate of saying that long-term investing is something that does not really exist anymore, in the way of just hold the index and leave it and leave it and leave it. I think a more proactive approach is required. That definitely does not mean coming to the other extreme and saying day trading or something like that. But a more proactive review of one's portfolio and positions every month at least, I think is mandatory, right? And also putting in alerts, if not exit orders, on your positions. And this is a one good lesson here to think about, right? Now, the same NASDAQ index, sorry, the same Indonesian index, but in US dollars, there's a NASDAQ Indonesia, right? The earlier one was so let me just make it, easier, and I'll just make it the monthly chart so that it's easier to compare. So this is Indonesia in its local currency, in the Indonesian rupiah, I think. So by the way, I don't know what happened, but TradingView seems to have made some changes in how they show this. If you remember, and you can go back to the previous global market review, you could change this setting here on the top right and change the currencies. You can actually do that in some. Just going back to, let us say, the Dow Jones, you see that on the top right, you can see the US dollar, and you have the ability of changing it to some other currency. It'll take the Forex rate and convert the chart. And this was the case with all the indices. For some reason, in the last few days or a week, for some of the indices, it just shows point, right? I'm not sure what the changes are. I did read up, and there was some comment on the TradingView support that for indices, they didn't say they removed it, but they said that that the indices will not have this conversion of currencies, but the stocks will continue to have. But when you actually look at it, you're seeing that some indices still retain the ability to change the base currency versus others like this do not, right? So this is a little bit very really unfortunate, and I hope that TradingView restores this functionality. I'm not sure what the logic was, because I mean it was very clearly you could play around with it, and depending on who you are as a local investor, foreign investor, that really makes a lot of difference, as you will see. So if I put the same chart now in the Nasdaq index for Indonesia, you can see that over 20 years, over 10 years, 15 years, you only seem to have lost money, right? So in 2013 is where the Nasdaq Indonesia index was at its life high, right? So if this is again a lesson to be learned, and you can see that in the last let me just put these quick levels, right, for reference. So you have from 22, so that's 4 years. You've gotten the index gone from 1,000 to 550, like almost a 50% drop if you were a US dollar investor. Now, in the same time, if you go to April 22 and keep that as a reference, the local currency in the local currency, it has gone up from 211 to 300. That was a 50% move, as we already observed, which has been lost. I know, right? But then on the other hand, after this fall that has happened in the last 6 months, if you look at it in the dollar terms, you went down from 340 to 500 almost. So that's a 30% loss in dollar terms. So if you're a foreign investor in Indonesia, short term, long term, you would be a very, very unhappy person, right? Looks like right now both the local and the foreign investors in Indonesia are very, very happy, but remarkably different returns for local versus foreign. This is Malaysia. In the Malaysian ringgit, again, this thing is not showing the currency it was earlier. So I'm just assuming this is the Malaysian ringgit. Nothing else seems to have changed. With chart studies and everything seem to be fine. And you can see that in terms of the local currency, 2014, that's still 12 years away, still away from that high. But if you look at Nasdaq MY, you can see that from 2014 onwards, from 1,100 you're at 800 and went all the way to 500. So again, a big loss, and this is on account of the devaluation of that currency against the US dollar, right? So you're going to see this play out again and again and again. This is the Vietnam index, the FTSE. Now, this is something that I just added, and I'm not sure this is in the local currency because it says FTSE. I'm just assuming it is. But if you look at the Vietnam Nasdaq, right, that also seems to be the same thing. So I'm a little not Nasdaq. This is the stocks Nasdaq Vietnam. I did not find. So Vietnam local, assuming this is local, and Vietnam dollar, right, seem to be in sync, right? So I'm a little careful about this. It needs more investigation. Now, if you look at the Philippines index, and this is again, I'm assuming the local currency, pesos, right? Philippine pesos. And if we, put that there, so let's have all these levels just very quickly there. And you can see that the Philippine market has really not done well at all. As a matter of fact, if you were a Filipino investor, you might want to actually get in because this is like coming back to 13-year support level with multiple supports here. I'm just counting this as one, but it's a complex one. There's two, there's three, there's four, there's five, there's six, and seven. And if this holds, which it could, right? No guarantees, of course, but I know that in Philippines the economy is quite is definitely struggling. The fuel prices have, I think, gone up 50-70% or even doubled. There have been shortages. There have been strikes about this, and this is going to take time to recover. So, but all said and done, from a purely technical perspective, this looks like a once in 13, 15-year opportunity if you are investing in the as a local in the Philippine pesos, right? Now, the same thing, NASDAQ in dollar terms, okay, NASDAQ Philippines index, you can see that, that's really gone bonkers. And in the sense that you had the high in, what was this? In 2015, and we've not seen that ever since then. As a matter of fact, it just seems to be trending lower, though it seems to also have come to that support level at 795. Now, given that what we saw, again, as a foreign investor, your views would be different, and as a local, your views would be different. If you were a foreigner, as you saw, there was plenty of opportunity in the US, in South Korea, in Taiwan, in China. So unless you have some compelling reason that you want to invest in Philippines, you really don't need to. But as a local, as I said, there could be a place, it could be that we are looking at some really good support. But again, just to go back to my main point, the index in peso terms and the index in dollar terms is starkly different, right? And as a matter of fact, in dollar terms, it just seems to be trending lower, but there could be good support, right? Now, for the first time, looking at the Nifty, right? And let me, first time, not first time in Nifty, but first time Nifty in terms of both the Indian rupee, right? So you see that I know that this is INR, right? But on the top right, it doesn't say INR, it says point, right? This is trading view. And we've got a really long history here. So let me just zoom in a bit, right? And when I do the same thing in Nasdaq India index, right, you can see that it is actually trending lower, right? So go back to Nifty. Just very quickly look, you have a top here and you have a top there, and you're down sort of 11%. But the Nasdaq, you can see you actually have a lower top, right? So you had a similar top as far as the Nifty is concerned, but as far as the Nasdaq is concerned, Nasdaq India is concerned, you are having a lower top, right? And the reason is quite simple. You have the Indian rupee, which has depreciated very, very significantly in the last 6 months. and the depreciation continues unabated. And if you are an investor in the Indian market, let's look at it on the weekly chart. It makes it a little bit easier to appreciate what a difference it is. This is Nasdaq India, and this is in dollar terms, Nasdaq India in dollar terms, and this is Nifty in rupee terms, right? So you can see that the in terms of in the Indian rupee term fall, you might have seen a 15% fall from its peak, but in terms of the fall in dollar terms, and that fall happened much earlier, it is from there to 25%, right? So 25% fall versus a 13% fall. Of course, I'm not taking time as the exact same thing, but just again, from a perspective of a foreigner, India is definitely not looking good at all, right? There is a very important piece of news that I want to put up here. I'm just going to pause this and then come back. Hold on, hold on, hold on. Uh, 1 sec. I'm just going to, so that it doesn't waste your time on the recording, and